Good afternoon, folks. This is Evan with TradingHighProbabilities.com for the weekend edition, May 1st, 2010. Well, this has been an interesting week. Let's start off looking at the Dow 30, or we'll take a look at the DIA, the ETF for the Dow, and let's kind of zoom in here. As you can see, here's the trend that has been happening since the beginning of February. If we go ahead and zoom in, let's go ahead and take a closer look. We'll find that we finally broke this this trend line, this ascending channel it's been traveling. And back on the 16th, we said that this is the kickstart of the change in sentiment in the market. And even though there was no follow through, we kept on watching for a potential opportunity. And as this top came into play, this little inverted hammer, this almost doji, it just triggered a nice sell-off over 200 points on the 27th of April. And we watched this, and we saw that over the next 2 days, what developed was we called it an Inside2. You typically won't find this in any books, at least that we haven't seen, but in our experience, in our past history, every time we've seen something like this, especially as it comes into the Bollinger Band and it does not pass this big down bar's opening price, and it closed underneath that or equal to, these two bodies were inside this big down bar. We jumped on this at the end of Thursday's trading day. We called out a trade idea to say, jump on board even if you can get it after hours. Just take it short. And sure enough, that paid out very nicely for us. We took it off a little bit premature. We could have probably eked out a few more cents to the downside. We thought for sure it would continue down to this close from the 27th, but we saw it was kind of stalling, so we took our profits when we got out. But this is typically a continuation pattern of this initial bar. So in order for this to be a continuation pattern now, it's anyone's guess. The only way it's a continuation pattern if it falls below this low. This low was 109.73. But don't be surprised if it kind of creeps up a little bit and comes back down. This pattern here, this Inside2, we had to take it and take what we can get, and it was a nice profitable day for us. You'll also notice that, let me get my trusted drawing tool out here, we also had some divergences setting up here as opposed to here. So we knew that this was happening. This day also we had some pretty nice trades called, and then we took some more shorts right here at the very top of this down slide from Friday. Let's take a look at the Qs as well. Kind of zoom in here. Now the Qs was able to reach its goal, and even though we didn't take the Qs, it did reach its goal and came down to the open, or really past, the close from the 27th. And again, it also set up with divergences, as you can see right here, as opposed to right here. And these are the things that we look for when we jump on board. A lot of people may say, okay, this is the breakout trade right here, and let's go ahead and take this breakout. But we have a lot of other indicators that we look at and proprietary systems that we've put together that enable us to call out the trade ideas for you to make that decision on whether to take that trade or not. And we took that call. We took some calls over here on this day, and again on this day, and again, of course, on Friday. Let's take a look at our trusted old VIX. Look at this VIX. We haven't seen this kind of low VIX. Let me just again zoom in here a little bit for you. We haven't seen 15 in a very long time. You know something had to happen when it came down all the way down to 15 back on the 12th of April. It was pretty low, and everybody was throwing up their hands saying, I don't get the market, this market's just going up, it's just I got to jump on board. And that's when you get ready to sell. And sure enough, This gave you this first indication that it spiked up on the 16th. That was the day that we called out the kicker, and we said that the market sentiment was changing, and we wouldn't be surprised if we had a little retest of the top again. And sure enough, it did retest, as we saw in the Dow and the Spider and the Qs. It did retest. In fact, it went even above that high, and then it just fell apart. And as you can see right here, on this day on the 27th, it just skyrocketed up 20 some odd percent on the VIX. Went right past the Bollinger Band, so of course you had to expect some type of pullback. And sure enough, if you take a look on this day, sure enough, what do you have? You have the 2 inside. So this 2 inside that occurred on the VIX also occurred opposite in the inverse on the Dow. So of course, if you wanted to play the VIX and take it long, you could have played it at the close of the day on Thursday, or just jumped on board once it started moving up a little bit. The VIX didn't really play out exactly as we liked it, because we thought for sure this bar on the 29th would have come down a little bit more to around 1809, would have been perfect, a perfect entry, and then you could have just jumped on board to take this long with some call or one of the ETFs for the VIX. Okay, just one last quick look at to see where we're at right now. Let me just zoom on the SPX. I drew some Fibonacci's. This level up here is the 1229, which is the 61.8% Fibonacci. We're very close. We're at 1219.80. So we're pretty close. What these white triangles right here are rectangles, excuse me. What these white rectangles represent are gaps that have not been filled. Right near the 50% Fibonacci level at 1121, this gap has not been filled. And what happens with gaps is somehow the market has a memory, and when it gets close to these gaps, these unfilled gaps, it'll typically fill them. So we have a gap here at the 50% level at a gap to fill of 1123.73, just 2 pennies over this 50% Fibonacci level. We have another one down here around the 1014 level on the SPX. And if we zoom out a little bit further, not to scare anyone, but we do have another level right around this 908 area. These are just, this is on the cash index of the SPX, and these are gaps that have gone unfilled. So for now, I wish you all a good weekend, and that's it for today, and have a great trading day on Monday, and we'll see you soon. This is Evan with Trading High Probabilities. Thanks. Bye-bye.